Mr. Amit Ramani, Chairman and Managing Director of Awfis Space Solutions, joins in because, amongst other things, Mr. Ramani, have you done what? A 3 lakh square feet of further signing in Pune. So clearly, co-working and space sharing seems to be picking up. Now, we spoke about the numbers, but can you just give us a brief overview of what's happened in the last 12 to 18 months within this space and for you? And how do you see this evolving over the course of the next 2-3 years with this whole GCC setup happening in India, but growth at the margin looking like slowing down a little bit?
So, Neeraj, clearly, I think the industry has run really well. Overall, if you look at commercial real estate, this year we are projecting almost 80 million of gross leasing, right, across the sector. So I think the last 2 years have been really, really good for the commercial real estate industry. It's been also great for the flex industry because if you look at the statistics, today we are number 2 in terms of commercial leasing, almost at 20% for the last few quarters, which is second highest after the IT/ITES sector. And clearly, obviously, we have seen a great growth journey for ourselves as well. Last 12 months, we added almost 34,000 seats, 50 plus centers. The numbers have done really well for us. We ended the year FY24 at about 850 crores. We first quarter FY25, we were at 258 crores, which was year on year about 37% growth. Our EBITDA margin improved significantly at 56% year on year, and we sit at approximately about 31% overall EBITDA. So I think the journey has turned out well for us. We turned profitable in the first quarter, almost 3 crores of profit. As far as the outlook of the industry goes, if you look at, there are 3 sectors which are driving the demand. One, as you rightly said, GCC, which is supposed to grow from about 19 odd million that we were in 23 to about 26 million in the next couple of years. In addition, the IT offshoring, right, with the, clearly the US and some of the other developed markets sending more work to the Indian IT offshoring industry. I think that sector is growing well. And then finally, India facing IT, right? I think that's developed well. So these 3 sectors are showing tremendous growth. In addition, all other sectors with the economy projected to do about 7% growth this year, I think will in turn have the commercial real estate grow and the flex will grow. We are projected for flex by 2026 to be almost about 100 plus million square feet, which would be about close to about 10% of the total commercial real estate market. For us, we are at FY25, we will continue to grow. About 30% growth is what's projected. We will continue to improve our margin. About 1.5% is growth in the margin in terms of EBITDA, is what we are projecting. And then we will continue to maintain our profitability. So things for the next few years look very, very positive.
I mean, so if I'm not wrong, in the con call, you said that the letter of intent for about 15,000 seats, 23 centers, massive pipeline as well. You reckon that you reckon that all of this can happen with improved operational metrics, or because of the fact that you are commissioning a lot of things and building it out and fitting it out and growing, that growth will come, but maybe it comes at lower operational metrics?
So, Neeraj, we are very clear that we want to maintain a certain level of first principles that we've already achieved right now. This year, our addition is going to be about 40,000 seats from 95,000 in FY24 to about 135,000 in FY25. As you rightly said, we already are sitting at about 127,000 seats if I look at the under fit out and LOI signed. So we are very, very bullish on the numbers that we are projecting. In fact, we will soon achieve those by end of second quarter itself. So for us, the maintaining the occupancy continues to be important. And to that end, I think last year we ended the whole year at about 71% blended and about 85% for centers which are 12 months or more vintage. We ended the first quarter also around the same numbers, and the projection for rest of the year is to maintain that healthy balance of 70% occupancy and 85% plus for centers which have 12 months or more of vintage.
Got it. Mr. Ramani, the other piece is that, I mean, and correct me if I'm wrong, but co-working and allied services is one, construction fit-out projects other, and at least in quarter 1, construction and fit-out projects grew so well. So now, how do you see the mix between the two, ideally, and what could happen? And can that change dramatically over the course of the next 3 years? Because, I mean, one thing is to look at your business on a quarterly EPS, quarterly margin perspective, but I rather look at it as to what you're doing right now versus what you do over the next 3 years.
So clearly, I think, Neeraj, if you look at it, it's a platform that we have curated, right? I mean, today we have 2,600 client companies that sit with us every day. And to that end, I think we are looking to offer them everything that a commercial real estate workplace requires under this platform. And I think to that end, we added the design and construction business, right? So we do co-working, we do managed office, we do mobility solutions, and we do currently design and build services, and we do also facility management services. So everything is available under one umbrella. The mix currently is about 75% for co-working, including our allied services in it, and 25% is design build. For the foreseeable future, the mix will continue to be the same. And I think we believe that this gives us the ability to continue to engage with our clients and delivering consistently, services to them.
Mr. Ramani, good morning. Tamanna here. You mentioned you have 2,600 clients which sit with you every day. What is that number going to go to by the end of this financial year? And just trying to understand that going forward, since it's been such a good run and co-working is dominating office leasing in the Indian market, what is the sort of strategic upside you have in mind?
So Tamanna, I think the number of clients in FY24 when we ended was approximately 2,300. So we have added some 300 plus odd clients. We obviously will continue to add. But in addition to these clients that are resident with us, our mobility solutions, which is a meeting room for an hour or a seat for a day, we have 3,000 companies that use us in that capacity. So we have close to about roughly 6,000 odd companies that use us on in some format or the other. So obviously we'll continue to grow this number. I think there are a total of about 11,000 companies that are meaningful in this country. And I think either they have been our customers or they currently are our customers. So I think that continues to be the focus for us. And we have the highest net promoter score in the country of 70%. That obviously is because, we deliver consistently for our clients. In terms of the, overall outlook, I think, as I said, I think we have curated a platform. We have created a network, right? Today, if you look at a city like Mumbai, we have 30 plus locations. A city like Bangalore have 34 locations, right? So we have an office center available in almost every single micro market. Today, we are almost in 60 micro markets across 70 cities in this country. We will add another 3 cities, so about 20 odd cities between tier 1 and tier 2 cities. And we believe that just like you need fast food, you think of McDonald's. When you think of work, you will think of office.
Well, not some of your other competitors. There's another very big brand which is also there in India. I just wanted to know what your market share is, Mr. Ramani, and where you aim for it to be.
So we would be in the top. We are the top when it comes to the network, right? We are the largest. We have, as I said, 169 as of June end. Today we have 185 plus locations. So as far as the network goes, we are the largest in the country. In the category of under 100 seats, right? We are probably the only branded player because a lot of the competition has moved into plus 100 plus seats. So I think we have market leadership in a lot of segments, and I think that we will continue to maintain as we go forward.
Just, another point on your revenue mix. Of course, the lion's share is from co-working space and allied services. Are you looking to move up the chain on fit-outs, or is the focus going to remain with the prime business?
So as I said, currently we have a 75-25 mix, 75% coming from co-working and allied services and 25% from our fit-out services. That mix will continue for the foreseeable future.
Okay. Mr. Ramani, the one, I heard you mention that you would do all of these businesses with operational metrics being maintained as well. Is there a formal, for lack of a better word, formal guidance that you may have given about what you will become, let's say 5 years out? I'm trying to understand how predictable would your line of business be in a country which is growing at 7%, circa 7%, whereas the world is kind of shrinking or growing at whatever pace that it is growing at? How predictable would this industry be currently? And therefore, by you being a market leader, how predictable would your growth be?
So, Neeraj, I think the India growth story is intact, right? I think even with the global headwinds, I think today also we see, India continuing to grow at a very, very fast pace. We are a under-commercialized market as compared to the world. If you put out the whole New York City 6 boroughs, right, it's 450 million square feet. All of India put together, commercial real estate, is 850 million square feet. So I think we are just starting. We're scratching the surface when it looks at continued growth for the commercial real estate market. As far as the flex industry goes, we are currently established, right? I mean, if you look at today, enterprises or large corporates make 65% of our business, right? In addition, 25% comes from MSMEs and mid corporates and about 10% from startups. So clearly, I think the growth will continue to happen. If you look at urbanization, in the next few years, almost 50% of all of India will be in the metro cities, right? That means 80% of that is towards services. So that will lead into commercial office growth, and that will lead to the flex industry growth. And clearly, I think we have maintained the market leadership. I think without committing on specific numbers, I think we work very, very effectively to build the network, right? Getting to about 17 cities and almost 200 locations, I think is no mean feat, right? So clearly, from that standpoint, we will continue to maintain that.
No doubt, it's no mean feat, Mr. Ramani. That's completely agreed, and it's showing in your profitability as well. Just want to understand that more focus on tier 2 cities going ahead, and what would be the difference in the operational metrics between tier 1 and tier 2?
So if you look at our current mix, out of the almost 185 odd centers, about 10%, 18, 19 odd centers are in tier 2 cities. Going forward, the mix will be 85% in tier 1, about 15% in tier 2 cities. To that end, I think, when you look at the operational metrics, they're similar, right? Because it's all a supply and demand ecosystem. So if I was to pick up a city like Nagpur, because of the lack of supply there, you could be paying more base rental, right, than let's say a Viman Nagar in Pune, right? So to that end, the metrics are all dependent on kind of where we are in a micro market. To that end, but I think clearly the tier 2 city growth is absolutely rapid. And I think we believe that the trend-driven economy is going to be written on the back of tier 1 obviously leading the charge, but tier 2 obviously supporting that growth.
Okay, thank you so much, Mr. Ramani, for speaking with us. A detailed conversation there with Chairman and Managing Director of Awfis Space Solutions. And yeah, co-working is going to be the way to go.